we activated live in YouTube. The session is in live in YouTube. Our speaker is set to join.
Can you hear me, or can you hear me now? Or okay, very good. Yeah, let me just check my slide before you try to do the YouTube thing online.
Yes, we are able to hear you, sir.
Yeah, yeah. No, I was saying maybe I can just try to share my.
I will activate you host.
Yeah.
Yeah, I made you co-host.
Okay. Are you able to see the screen?
Yes. It's visible, Dr. Miller.
Okay, great. Okay, so yeah, I think I'm ready whenever you want to start.
Dr. Miller, we'll just wait for 5 more minutes for our members to join, then we'll start.
Okay. Yeah, so maybe I'll just stop share and then share again, if that's okay.
That will work.
It's okay, or I can leave it on. Maybe I can just leave it on.
Anything is comfortable to you. Yeah, we are excited for your session. I'll be the MC for the event, so I'm actually looking forward to it.
Okay, thanks.
এটা চলবে, এটা দেখতেই পারি ছিল ঘরের মধ্যে শুয়েছিলেন তা না এখানে
Yeah, I think you may have to keep everyone on mute, I think.
Yeah.
Because I think people are always parallel processing on Zoom, I find.
Everyone will just wait for 2 more minutes and we'll start at 5:05. Thank you for your patience.
Okay, I have muted everybody, and the speakers can unmute themselves and speak. Okay.
Bankers do. They act like they're in control even when they're not. Anand, I guess. Thanks. No, sorry, Mark. Sorry. Yeah, no, I was just saying that I guess these for high conviction names you can use this. I mean, stocks are on sale if you really believe in it with a long-term horizon. Yeah, exactly. Yeah. Anand, thanks.
I think we can start.
Sure thing, as you say, Santosh. And I think it's the high time we start because all of our members who have joined are excited to listen to the session on India's digital leapfrog for the financial inclusion. So I'll come to that. So first of all, good evening to all the dear members and the speakers and the guests. Just 3 days ago, we celebrated 73rd Republic Day of India. However, owing to increased number of COVID-19 cases, we were not able to meet and greet each other. So on behalf of the entire family of Bahrain chapter of ICI and Kuwait chapter of ICI, I'll use this platform and wish all the members, guests, and speakers happy 73rd Republic Day. As I can recall, during one of the events, Prime Minister Narendra Modi said, India has seen a dream of digital India, from latest science to the latest technology. Everything should be available at the tip of the fingers. So today, Bahrain and Kuwait chapter of ICI jointly are privileged to proudly continue to contribute to the growth of the professions and professionals by bringing this technical event on the topic of digitalization and financial inclusion that will help India achieve its dream. With this, now I would like to invite the chairperson of Bahrain chapter of ICI, CA Santosh Varghese, to take over the control and deliver welcome address to our members and the guests and the speakers. CA Santosh, over to you.
Santosh, you have to unmute yourself.
Okay, good evening, and thank you very much, CA Vivek, for giving that wonderful introduction for the event as well as the background of it welcoming. It's a privilege and honor for Bahrain chapter of ICA along with Kuwait chapter to host a high-profile event on a very relevant topic of financial inclusion and digital transformation subject. And we are privileged to have a very established, well-known speaker, Mr. Viral Acharya for the first session. And after that, we have a Rajiv, and both are very well-known speakers. And without further ado, I'll welcome all the members of Bahrain chapter to this session. Also the Kuwait chapters, all the executive committee members of the Bahrain as well as the Kuwait chapter for this session, also the speakers. Thank you very much. I am sure all of us will enjoy this session, and I'll give the control back to you, CA Vivek.
Thank you, CA Santosh. Now, to put cherry on the cake, I would request all the participants to please welcome Chairman of Kuwait chapter of ICI, CA Deepak Bindal, to speak a few words with our audience. CA Deepak, could you please take over the control? We are excited to listen to you.
Thank you. I am Deepak Bindal, Chairman of ICI Kuwait chapter. We have more than 600 Indian chartered accountants working in Kuwait in various capacities, and it's an honor and pleasure to join Bahrain chapter. We have two eminent speakers. So Dr. Viral Acharya, everyone knows him. And Dr. Viral, I know one of your IIT Mumbai colleague and who was in hostel with you. And, you know, apart from multifaceted personality which you are, I also came to know that you are a good singer. So
he composed the music, I think. Yeah, I was just reading through that. It's great.
Yes, yeah. So in IIT Mumbai, he was one of the most sought after speaker. So we are eager to look forward to listen to you and know more about your enriched experience in the banking arena. So over to CA Vivek to invite formally Dr. Viral, and we are all excited and eager. Thank you from Kuwait chapter.
Thank you, CA Deepak. Now I'll request the participants to tighten their seatbelts, because today digital technologies provide an opportunity to accelerate financial inclusion. It facilitates efficiencies that make it possible for the financial service provider to serve the unbanked and underbanked. And therefore, to educate our audience on the topic of digital financial inclusion, we have an eminent personality present among us, who holds the position of CV Star Professor of Economics in the Department of Finance at the NYU Stern School of Business, who is an academic advisor to the Federal Reserve Banks of New York and Philadelphia, ex-deputy governor at the RBI, and the list goes on. So without further ado, let me invite our first speaker for the session on the topic of India's leapfrog into digital financial inclusion. None other than Dr. Viral V. Acharya. Over to you, sir.
Great. Thank you so much, Vivek. Just want to confirm you're able to hear me well.
Yes, it's crystal clear, sir.
Okay, thank you so much. Thank you everyone for joining. Thank you also to Santosh and Mr. Vindal for the kind introductions. I'm actually stuck in New Jersey. There's a snowstorm actually in the New York, New Jersey area. So, but you know, thanks to Zoom, it doesn't matter where I am. I wanted to talk about the leapfrogging that's potentially happening in India in digital finance and through that in financial inclusion. Someone asked in the chat room, what does it mean that there's NYU Stern School of Business, November to December? All that it means is that I'm with NYU Stern School of Business, Shilpa, and this presentation was prepared during November, December 2021. Maybe it'll get updated the way things are moving so quickly in this space, but that's where we are right now. I want to make a particular mention of some folks with whom I've worked on this. Tanuj Bhojwani, Kamya Chandra, and Sharat Sharma of the iSpirit team. Some of you might be aware, but iSpirit is basically the Indian software products industry roundtable. It's a sort of like a I wouldn't say a self-regulatory body, but it's a self sort of appointed body for designing standards in Indian software. They have played a very big role in what I'm going to show you. And they've also helped me out in understanding this space and presentation that I'm about to show you. But the big question, I think, as Vivek mentioned, is can India bank for its billion plus? And is digital finance changing the way that could happen in future? So just to put some things in perspective, if you go to about 13 years back in 2008, only about 17% of Indians had bank accounts, and barely 15% used digital payments. Perhaps digital payments were low in most parts of the world at that time, with the exception of maybe Iceland or Sweden and Scandinavia, where it snows for like 5-6 months in a year, and it doesn't make sense to even go to an ATM. So they had moved ahead to digital. But by and large, the coverage of bank accounts was quite large in most parts of the world. And in fact, rather than having financial inclusion all over the country, what was rampant in India was actually financial exclusion. And this is in spite of a large number of banks having been nationalized in the 70s under one of the pretexts of having financial inclusion all over the country. So the massive waves of nationalization of banks that were undertaken in India, at least in the next 40 years, didn't seem to have made giant strides in providing financial inclusion. However, in the 13 years since then, things have changed, and they have changed for better. A large number of Indians are now leapfrogging and getting digital through mobile connections. In fact, in India, that's the way that everyone gets digitized at the first pass. It's not through a laptop or a desktop, it's through a mobile phone. A large number of Indians now have unique identification, the so-called Aadhaar, which was a project that was started right after 2008. And then pilots were on, and then it got rolled out all over the country. But of course, bandwidth and internet provision has also improved. Digital payments have accelerated, especially in the last 5 years, and particularly so during the pandemic phase of the last 2 years. More than 81% of the adults now have bank accounts. So that's almost like a reversal of statistics as far as who is covered versus not covered in bank accounts. And now we have, of course, more formalization, even though a lot more needs to be done for formalization of businesses as a result. So things are definitely changing, as Prime Minister's quote was mentioned, or as a large number of economists, tech sector industrialists have been highlighting in their respective speeches. Now, the question is, why and how has this happened? In fact, I can tell you that when I was at the central bank and even outside, India is being considered as a role model for the way digital finance has developed in the country. Because there's a sense that the West, especially the United States, has a very fragmented system of digitization. So each bank is doing things on its own, and there aren't adequate standards and interoperability of these standards. China, at the other extreme, of course, has its own national champions who have provided a great deal of financial inclusion and digitization. But the concern there is that now they've become very large. The government is doing a massive crackdown on them, perhaps precisely because they are becoming so powerful. And that this has evolved privately, like in the United States, but with great deal of concentration. In contrast, India has adopted a slightly different model, in my view. India has adopted a model in which standards have been developed. The private sector is developing digital finance on top of these standards. And these standards are ensuring a very high level of interoperability of payments, of digital transactions, of bank accounts, of other kinds of digital accounts that are being set up, as I'll explain. And what that interoperability means is that have a high degree of flexibility to switch from one payments or digital finance provider to another. And this means you cannot have very high levels of concentration. You're going to see, in fact, higher levels of competition than what is being seen in the fragmented digital world of the West and the concentrated digital world of China. But let me explain how these standards have developed. The iSPRIT team likes to think about these standards as a public digital infrastructure. So when we think of the physical market infrastructure, which gets spoken about a lot, we think of roads, railways, airports, streetlights, are enabling the private cars, taxis, planes, and trains to provide transport to people. Presumably, people and the providers of the transport services think of roads, railways, airports, etc., as public good. And someone in the system has to collectively use taxes to provide this. Now, the same way, India has developed a digital infrastructure, a set of pipes or plumbing of the digital finance system, which is called as India Stack. This India Stack is a set of digital connectors. They, in the world of electronics, they are the roads, railways, and airports, but these are the digital connectors across the users. It's an open technology. It is based on standards of what in the software language gets called as APIs. And these are for identity verification. So this is for Aadhaar and its verification. These are for digital payments, transferring from one account to another. And then for repositories and verifications and transfers of data with consent of the users. These are the three critical infrastructure steps of India's stack or the India's digital infrastructure. And what is the idea? That these are the digital connectors which once provided, like roads, railways, airports, will enable private banks, non-bank finance companies, fintech, etc., to provide accounts, payments, credit, mutual fund, insurance, and all kinds of financial services at the last mile. But the key point, and I want to stress this, that when you think of India's digital finance compared to the United States or China, it is fundamentally different in its architecture. It's devised as a standardized public infrastructure rather than something that's either too fragmented or too concentrated and developed primarily by the private sector in a manner that's not interoperable. That's not how India's digital finance is organized. So as I've already hinted, this India stack or India's public digital infrastructure has 3 layers. There's an identity layer, which is about giving everyone a unique ID and its verification. I am who I claim to be. Then there's a payments layer, which is to enable payments from one person to anyone else. And fast, cheap, interoperable. In my view, India's payment system is without a doubt one of the best in the world, the way it has been designed on top of this Aadhaar or the identity verification. And the new layer, which is still underway, is this data empowerment level, which is, can an individual or an individual business's data be aggregated through various accounts and then be shared in a secure manner to a set of financial service providers who can then unleash potentially through machine learning, AI, algorithms, stress tests, back tests, a set of robust financial service provision to these individuals and their businesses. I won't get into too much details on this, but this has been a very modular project that has been in play. This iSpread team was set up and championed by Nandan Nilekani, the former CEO of Infosys, and now the brainchild behind Aadhaar and its implementation. They first worked on the identity layer. Once it was roughly in place, they started working on the payments layer. And once the payment layers was in place, they started working in parallel on the data layer. And the final stage right now, as I'll explain, is giving individual the ability to aggregate their data digitally, give consent to sharing of this data through an account aggregator service to fintech providers in order to deepen the inclusion of digital finance services. I want to clarify that financial inclusion can be achieved more with digital finance once you have created these pipes at the extensive margin, which is that you are bringing more and more people into the formal digital finance net, rather than necessarily making more loans to those who are already there. Because those who are already borrowing in the formal network are reasonably digitized. What's the game changer here? The game changer here is that can you deepen the access of finance to formalize more and more of what has been happening in India informally. So we are over this phase one. The phase one was ease of opening new accounts, identity verification services, and ease of digital payments. This was sort of like 2009 to 2015, 16 of India's digital finance. And, we had peer-to-peer, peer-to-merchants, government to person, business to business, etc. All of this has been done. And, all of this, at the center of all of this is India's beautifully designed payment system, which is called as the Unified Payment Interface, or UPI. It's so simple. I don't know if you have done a transaction in India, but it is so simple. You can have your phone number or your Aadhaar number as your identity. Your account can just be your phone number, on the UPI. The moment you try to send a payment to someone else, either based on their phone number or their unique ID, first, you have to verify your own identity. So there will be an Aadhaar authentication that will take place at the stage one. But how is the payer being connected to the payee? Of course, the payer and payee have their respective banks. So there's a remitter bank from which the debit transaction is going to occur, and there's a beneficiary bank to which the credit transaction is going to occur. But this system is not fragmented. It's all happening through that central utility, which is sitting there called the UPI, the Unified Payment Interface. And why is that important? Because it says that this payment system, these digital pipes that are connected to one of you in India, don't have to be specific to an individual bank. If tomorrow I change my bank, Why should I change the pipes that are connecting me to you through digital payment networks? And that's the beauty of the UPI. If tomorrow I change my remitting from bank A to bank B, my identity doesn't change. My account on the payment system doesn't change. It's still linked to my phone number. My verification services don't change because I have not changed. All that has changed is my bank. And that's just a back end of this transaction, as you can see over there. So along the way, all verifications, of course, have to take place. And that is where UPI comes in. It's setting the standard for doing these verifications. It's setting the standards for encryption of data along these pipes. And it's ensuring that the system is interoperable. No bank can design its own monopolistic payment services and then make all its users captive on that payment service simply because they are a large bank. That's not going to happen. If their services are not good, they are charging me high fees for the payments, I can just switch my bank and nothing else changes in the way I'm making transactions to one of you. So phase one is this beautiful payment services system developed on back of the identity verification. Phase two now is financial services, credit, insurance, investments. Even though I'll primarily focus on credit, it could be any of these financial services. And to do this, we need now a slightly more refined set of pipes. These are for data sharing called account aggregator, and for scalable fintech partnerships, we again need a standardized way to enable credit to some of these individuals and individual businesses. And the right analogy for thinking about this, I'll use an analogy from chess. When you play chess, first you learn how to move the pawn, how to move the bishop, the rook, the knight, the queen, the king. But once you have learned that the basics of all that and how to castle and all that, then you get into combinations. How do you combine pieces to form complex strategies? Such a simple game with individual modular movements of individual pieces, then through the rules of the game and the combination of the pieces becomes one of the most challenging mind games. And that's because once you combine the individual modular pieces, in some sense, the strategy space is very complex. It's the same with the provision of financial services. Once the identity verification, once the creation of bank accounts, once the pipes that connect me to you through an interoperable payment system, once my ability to aggregate my data and share it securely, once all of these modules are well developed, now fintech and the user can combine these modules into very complex fintech strategies. So why is this important for India? Why do we think this is going to be a game changer for financial inclusion? It's because right now, only 16% of credit to micro, small, and medium enterprises in India is met through formal credit. It's like we are basically only at the tip of the iceberg. Barely 600,000 MSMEs have formal credit products. The remaining 63 million do not. The estimates are that there is an untapped credit potential of 3.5 trillion, which is either entirely unmet or is being met through the money launderer, through private money lenders who charge, usurious interest rates. They use goons to collect, their money back. And when these small businesses and the owners get simple things like health shocks during the pandemic, if they are borrowing through the informal system, how is the central bank or the government supposed to give them a debt moratorium? How is it supposed to suspend payments? It's all happening in the informal network. It's now entirely between the bilateral relationship of the money lender with the borrower. There is no way to actually, for the system to actually accommodate them against these kinds of big shocks. This is just one example of the disadvantages of informal lending. So to fill this gap, India needs to now go to the next way of doing banking. Or banking is not just providing services through a bank. In my view, banking is provision of financial intermediation services, not just savings and checking accounts, but also credit. And The game changer here potentially can be if India embraces what we like to think of between me and the iSpread team as embedded finance. What is embedded finance? Embedded finance is where the credit provider doesn't try to sell me a loan through a third-party broker who doesn't know me. They don't try to collect or recover on my loan through a goon, again, a third-party collection agency that doesn't know me as the recipient of credit. Instead, in today's data sharing economy, a large number of individuals and businesses are connected to sharing platforms. It can be Amazon, it can be Flipkart, it can be Big Bazaar, it can be a sharing platform that provides you digital services. It can be the GSTN network for providing, for paying taxes to the government. It could be the government e-marketplace through which small businesses are providing their services or goods to the ministries and the government-owned businesses. Whatever the sharing platform be, that's an entity that's already connected to me in the digital space. Financial service providers such as banks, fintechs, non-bank finance companies can now work with these sharing platforms, which are already embedded in the economy of the individuals and the small businesses, to sell financial services and to recover payments on the financial services that they are providing. Now, what would such an embedded finance system require? It requires a structured high-trust data ecosystem. Clearly, no one's going to give credit to me without creating my credit scores and doing some basic verifications. So data has to move through securely and in a trustworthy manner. Then there has to be an sort of a fintech layer through algorithmic credit scoring, backtesting, historical prediction of defaults, etc., so that my data can be mapped into how creditworthy I am, what maturity scale of credit I should get, etc. And then the question is, who should be connecting me to this whole network of financial service providers? They could be mutual funds, insurance companies, banks, non-banks, etc. This can happen through the sharing platforms of the e-commerce or the digital economy, who can now become loan service providers or LSPs, and more generally financial service providers, because they are already connected to me through the business that I do. The third-party loan broker doesn't even know me. The third-party collection agency doesn't know me. I have no reputational advantage of honoring a transaction, and I don't know a third-party broker when they knock on my door and say, do you want a loan from a bank XYZ? I don't even know the person. So first I have to build that relationship. I have to build some trust, but I already have trust and a relationship with my e-commerce platform. I'm doing a ton of transactions every month on that platform. Why can't we use them as intermediaries to accelerate digital finance and deepen the access to digital finance? So in a nutshell, from being informal and data poor, we need to move to privacy first, consent-based ecosystem. We need lenders from assessing physical collateral to assessing information collateral. In India, they call it moving from doing asset-based lending to doing cash flow-based lending. Small businesses don't have large quantities of physical collateral. What do they have? They have huge transaction flows. They are service providers most of the times. If you can create a history of this service provision and what payments they have collected on that, that becomes information collateral, just the way an Amazon book has been bought and sold a large number of times on an e-commerce platform, and there is an entire history of reviews and scoring and quotes, etc., which are based on people's usage of this. That's information collateral that's on the book page of Amazon, which is now by far the most visited site for determining whether a book is worth buying or not. It's information collateral now. No one walks to a physical store and asks the bookstore, oh, which books are you recommending that I buy? And then from direct selling agents, we can use these e-commerce platforms as intermediaries of the borrowers to connect them to the eventual financial service providers. I'll just move through a bit quickly. On top of this, there is an account. So there are two pieces which are under work in India right now. They are already having been piloted. So one is an account aggregator. What is an account aggregator? I have a bank account. I have a mutual fund account. I have an insurance account. I'm doing transactions on government GST network. I'm doing transactions on government's e-marketplace. I'm paying utility bills. All of this is digitized information about me that's relevant for my credit history. Now, each one of this is actually a data custodian. My bank has accounts of what transactions I'm doing through checking and savings. My mutual fund has transaction accounts of what I'm buying and selling. The GSTN network of the government has accounts of what invoices I'm creating and then paying the government a GST tax based on that. An account aggregator is a super data custodian on top of all these individual data custodians. Of course, one of the data custodians may itself have a natural advantage in becoming the super data custodian. But what is it? They are basically like a digital pass-through that collects all the information, encrypts it, and in a trustworthy manner can relay this information to a potential financial service provider. So that provider doesn't have to approach a bank, a mutual fund, or the GSTN network individually, but can just connect to the account aggregator as a trustworthy encrypted data pipe through which the borrower can give consent to the provider viewing its data, and then everything else can happen seamlessly. Of course, you need a legal architecture backing this. What are the privacy rules that have to be respected? That's in works in India. But what India has done is that this account aggregator system is the best in the tech class because it's based on encryption standards. It's based on interoperable standards that the software industry has developed. So I give consent to sharing my data. Account aggregator, which is the super custodian of data, collects data from banks, mutual funds, insurance, tax, GST platforms, and in step 3, relays this information to potential financial information users who may be providing cash flow-based credit, personal finance management, wealth management, and maybe in a futuristic world, perhaps even machine learning and AI-based robo advice. Okay, now that's one piece, the account aggregator. The second piece is how do we connect the e-commerce platforms? So account aggregator gives data to the financial service providers, but financial service providers need to know who are the potential borrowers. How do we deepen access of the financial service providers to the potential borrowers? As I was explaining, we need to use the e-commerce platforms. And what India is doing is creating a standardized network called OCEN, Open Credit Enablement Network, to now deepen these access. So we need a discovery of creditworthy borrowers, we need trustworthy data, and we need to also be able to collect data in a manner that doesn't mean that you have to use goons and threaten people's lives in order to recollect the payments. We need to do it in a civilized manner. We need to use formal mechanisms to do it. And we need to use the rule of law rather than the rule of might in order to get these payment services to be made. So how is this step going to look like? On the right-hand side, you have a large number of potential borrowers. Think of these as individuals or small enterprises. On the left-hand side, you have the potential lenders who have the savings of the economy. So the idea is to channel these savings across the bridge of intermediaries to the potential borrowers. Who is embedded in the ecosystem of these individuals and enterprises? These are the large numbers of borrower-facing sharing economy marketplaces. Who are these? These could be tax and legal filing apps, loan selection platforms, agri-tech, e-commerce, social networks, kirana tech, gig economy aggregators, supply chain financiers. There's such a wide variety of such intermediaries now. Now, what we want to do is not give one of these platforms, again, a monopoly in the provision of financial services. We don't want that everyone be connected just through GSTN or Amazon. We want it to happen through an interoperable manner. So what is the key step? The key step is to now have a common bridge that is between the lenders and the sharing economy platforms, that's again standardized, it's again interoperable. So if tomorrow a borrower thinks that one of its e-commerce platform at the top is not providing it the right loan services, it's not connecting it to all the banks, they can just switch to these financial services being acquired through another platform tomorrow. If they don't like the banks, they can go back to the intermediary or the loan selling agent and say, can you connect me to bank XYZ? Why is it not on your platform? So here's a simple example, and I'll more or less stop with that example, which is how simple it can be in digital finance if India wants to push this and leapfrog as it is likely will over the next 5 to 10 years. So let's say I'm a small micro business. I'm doing business with the government ministries in providing, say, some supply of digital services for processing of, say, certain kinds of transactions for the government. Okay. Well, my name is MK123. That's my GST username. I created an account, and then, because my identity is verified, there'll be an OTP that will come uniquely to my phone. I enter it, and now I'm in the system. Now, what is on this government e-marketplace platform? My invoices of transactions with government ministries and enterprises. So I have businesses with ONGC, Ministry of Electronics and IT. So I have transactions with them. I have provided some services, and payments are going to come due at some future point of time. On 22nd July, 150,000 rupees is going to come due from ONGC and 32,205 rupees from Ministry of Electronics and IT. But these payments are coming at a future point of time. Let's say today we are in March. These payments are coming in 3 months' time. I want to finance these account receivables. I want to borrow against this. So the platform, through my phone potentially, or tablet or iPad or laptop, will show me what loans are eligible. I want to borrow against my account receivable from ONGC. I want to borrow against my account receivable from Ministry of Electronics and IT. And so it says that you can borrow up to your order amounts. There are the various accepted dates, etc., etc. Then the financing offers are available from a range of banks. It will tell me for what period can I borrow and at what interest rate. Typically, these are 90-day account receivables, and different banks, based on their credit scoring, etc., and based on their financing conditions, are giving me different rates. I pick the lowest interest rate. I sign the account. The beauty of this is you can sign the entire loan contract and verify it digitally. Like some of you might be using DocuSign on the internet. In India, you can just do it through Aadhaar. You can have Aadhaar e-signing of documents through your UID. So you enter the OTP again, you sign the facility agreement. And what is the most important step in this usage of the e-commerce platform? You can encapsulate even the repayment on the electronic platform, because there is an account receivable that's going to come. That account receivable, when the money comes on that, it can be encapsulated on the GSTN network and then be relayed directly to the loan provider against that account receivable. No recollection agency required, no goons required, no threats to life required. It all happens digitally, formally, and by, on an interoperable platform. I can set up a repayment account, update my account details, loan is dispersed, and in 90 days, the loan will be repaid. If there is a default, then of course you have to take it to the court of law. So let me just stop here, which is that the way India is digitizing is extremely promising, because right now the world looks very disorganized and chaotic in this fragmented informal lending network. What is India trying to do? India is trying to connect all these borrowers who are on the outer rim of this complex universe of India's digital finance right to the center, which is where the savings are. And then on the interim rim are all these e-commerce sharing platforms. So at the center are the banks or the Fintechs who have the savings. The interim rim are all the sharing economy platforms. And India is trying to use these digital connector pipes, first from the borrower to the sharing economy platforms, then through OCEN from the sharing economy platform through the banks, and the borrower is having another sort of hyperloop that's through the relaying the data information. And this potentially can deepen the access to formal credit. Banks with the lowest cost of capital can reach to people and businesses via loan service providers and fintechs, all through a digitized interoperable system. Just one last point. Banks and fintechs will still need to manage their risks. I think things can still go bad. You can go through lending boom and bust cycles. So going digital is not a compensation for doing risk management at the banks. Be well capitalized. They'll still need to have good verification of their credit scoring algorithms. There will be unexpected losses over the cycle. They need to bear those losses and ensure that they don't get into trouble through the lending boom and bust patterns. So let me stop there, and if there's time, I can take a few questions.
Yes, Dr. Viral, we have 15 to 20 minutes of Q&A sessions because the time
Okay,
permits us.
perfect. Yeah.
And we have our members who are excited to have answers to their numerous questions. So I'll read the questions. It's in the chat box for your reference as well. So the first question comes from CA Rabin Gonzalez. That is Paytm also considered as a platform? Because we were talking about I understand we were talking about the embedded finance, that how the aggregator are serving as a platform. So is Paytm is also considered one of them?
Yeah, absolutely. It's just a payment mechanism. There's a bunch of people who have accounts on Paytm. And if Paytm wants to potentially connect banks or other digital lenders to the borrowers, it can do so. I think a more complex question is, can Paytm itself start providing credit as an e-commerce platform? Can it become a bank, start collecting savings and making loans in the first place? I think that is for the credit regulator, the central bank or the Reserve Bank of India to decide. In my view, there are some fundamental conflicts of interest that will arise if the e-commerce platforms themselves start evolving into banks. What do I have in mind? Something like Paytm is mostly just a payment service provider. And in that sense, you can say it is like a basic banking style intermediary. But the question that's arising everywhere in the world, and I'm just taking the question a little bit to ask a slightly broader question, is should the likes of Amazon, Facebook, etc., be allowed to do banking services? Should they be allowed to collect savings? Should they be allowed to then channel credit? In my view, it's not a good idea because they are also connected through business services to the same clients. So you want that the party that's providing the credit not have an incentive to mingle the business transaction with the financial services, because then what will happen is you can start compromising your credit quality in order to ensure that your business interest in the recipient of credit actually goes well. So you probably don't want to create a monopoly where both the business and the credit are happening through the same provider. It's basically going to the same question as whether industrial houses should be allowed to own banks in India or not. It's the same question. And I think there are very deep conflicts of interest associated with that. But something like Paytm would be a very natural loan selling agent, in my view, in at least the view of the world that I have described.
Okay. So we'll move to the next question. But before we move to the next question, let me just inform the members that in interest of the time, we'll take the questions in the order that we have received. Because Dr. Will, you can see our chat box has been bombarded with the questions on the interesting topic.
Yes.
So the second question is Ease 4.0 launched by the Indian government in August 2021 is in the tune of digitalization of financial sector in India?
4.0. What is 4.0? EAS 4.0. I'm sorry, I don't know exactly what Ease 4.0 is. So pardon my ignorance. I think I'll have
that's completely fine, Dr. Viral. We'll move on to the next question, where our member asks, why is there a hesitation or lack of enthusiasm by the RBI to open up cross-border remittances being directly caused onto mobile wallets in India?
Yeah, I think this is a very tricky question. See, essentially, emerging markets are unfortunately at the whims of what I call as a global financial cycle. When the Federal Reserve lowers interest rates and is generally printing a lot of dollars, many of these dollars start chasing India in the bond markets, in the equity markets, etc. And India gets massive equity price run-ups, which are partly driven by FPI flows, among other things. But the reverse also happens. It has just started happening. Fed can also raise interest rates and withdraw dollars from the system. At that point, the Indian rupee generally starts weakening because interest rates are now rising in the United States. So the dollars actually, which were searching for higher yields, now start getting sucked out and moving back to the United States. Now, these dollar inflows and outflows have to be managed by the central bank because they can otherwise create excessive volatility in the valuation of the Indian rupee. Now, at the time, how does the central bank manage this? If there is a sudden outflow of rupee for conversion into dollars, then the central bank actually provides dollars from its dollar chest and effectively seeks to stabilize the rupee at that time. But there have been episodes in which the depreciation can be faster than what the central bank is hoping for. Take taper tantrum of 2013, for example, where there was a close to 25% depreciation of the rupee from peak to trough in a period of 3 months. At that time, there's a lot of individuals who try to get out of their rupees and start converting their money into dollars because the real value of the rupee is collapsing in an international sense at that point of time. So in some sense, the central bank ideally would like to maintain some capital controls in place. They don't want a completely seamless transfer of rupee into dollars being possible. So from an individual consumer standpoint, of course, it would be beautiful to be able to do crypto. It would be beautiful to be able to do the mobile wallets because they actually provide you the flexibility of doing remittances at lower transaction costs than what the banks allow you. I'm sending dollars, by the way, every year to India. So I know how much banks are charging. It's unbelievably high. I have no understanding as to why banks get away with, it's part monopoly. It's partly they have to go through a set of KYC and anti-money laundering rules. So they are trying to recover some money on that. But it's still 2.5% to 3% on every transaction seems phenomenally high transaction cost. So there's a reason why people are looking for alternative remittance and payment services. The reason why the bank is uncomfortable with that is because these are now in completely unregulated spaces. You can't right now control money laundering that could happen through all of these channels. You can't throw sand in the wheels of outflows of rupees happening through these forms in the reverse direction, not for remittances, but in the reverse direction. So that is the challenge. It's a trade-off. So you have to manage the efficiency of the remittances with the fragility that happens when the rupee is depreciating because the money can fly out more easily and the central bank can control it better if it's happening through the banking system because it can put some administrative controls on, what kind of transactions can happen in a given month, what is the volume of outflows that can take place. The central bank can even pick up the phone and talk to the 10 largest banks and get information as to how deep are the outflows that are happening through the banking system. But if everything is leaking through other taps in the system, the central bank may not even have a sense of what is the actual outflow situation that the country is facing as far as rupees being converted into dollars is concerned.
Thank you, Dr.
So it's a trade-off between efficiency and financial stability. I think that's one way of thinking about it. Yeah.
So I hope Dr. C.A. Parshnath, that answers your question. Now I'll move to the next question from C.A. Mani Lakshminarayan. He has two questions, but I'll take the one. He says, in the GCC, open banking is one of the concepts central banks are pushing to the retail banks. But what is the status in India for the open banking platforms?
You mean of the like OCEN sort of platform that I was just describing?
Yes.
Yeah, it's see, Open is just a set of software pipes. It's an industry standard. It's not something that the regulator as of yet has said, oh, you must do it this way or that way. But what happens is once an industry standard has been adopted, everything basically gets relayed through that, and it's going to be interoperable because everyone has to connect to the UPI. How do you connect to the UPI? The OCAN already gives you an India stack of software platform to do that. So to the best of my knowledge, I'm not aware of public and private banks trying to find their own platform, designing their own platforms and softwares to actually work in parallel with something like OCAN and the UPI. I think in case of UPI, probably it's not even authorized to do that. But in case of OCAN, I'm not sure of anyone doing it beyond OCAN, because when you have such a high trustworthy platform being developed as a standard, you would have to build that trust of your own if you were to develop a system of your own. Now, having said that, why do some people still favor the American system where every bank is designing its own platform and digital pipe, so to speak? Because they think that a single utility doing it all may stifle on innovation at some point. Whereas the fragmented system trying to get customers to move from one platform to the other will also keep innovating on the margin in a much more nimble manner. So again, there's a trade-off there. There's no consensus on which is better. In my view, it's better to have encryption and trustworthiness of data through these digital pipes, because you really want the privacy of the consumer's data to be respected. And I think in a country like India, where frauds happen far more often, protection against fraud is not as strong as in other countries. I think building a trustworthy system is far more important. UPI, the Beam platform, these acronyms and their build a lot of trust in the user's mind that, no, this is backed by a government utility like the NTPC. That creates tremendous trust in the user. Yeah. Of course, you want to ensure that they are nimble, they are always innovating, and that's something that the industry, the banks, the central bank, and the government have to work together with the utility to ensure over a period of time.
Okay. So we'll move to the next question. We'll take 2 or 3 questions more. Then after that, we'll conclude the Q&A session. Next question is from CA Janesh Seth. He asks, sir, the flag bearers of Fintech in India have had a shaky start, at least in public space, in terms of management quality and integrity issues. What are your thoughts on the same?
Yeah, and I think this is a very important issue. There will be failures. I'm not saying that digital finance is a way to necessarily ensuring that no fintechs will fail. Fintechs can make the same mistakes that our banks have made in the past. They could be credit scoring poorly in interest of getting easy loan volumes early on. They could be compromising on credit standards, giving low interest rates relative to the credit score of the borrower. So that's a risk management question. That's a question about the regulatory standard, capital standards that they need to be subjected to. My point is simple, that the digitization, the way it's happening in India, gives access to a deeper set of borrowers to enter the formal system than what was possible in the past. Will there be small fintechs that blow up? Absolutely. This is bound to happen when you try out a new technology. Should they be regulated? Should they be subject to capital standards? In my view, they are going to be providing banking style services. So just the way we subject banks to regulatory standards, I think eventually, at least beyond size, even these fintechs will have to be subjected to regulations. And I think that is the spirit of India's regulation. I think microfinance entities, small payment banks, large banks, large NBFCs, India has basically embraced a sort of a differentiated organization of banking service providers, let's call it financial service providers, and the differentiated set of regulations for each one of them based on what's the suitability of the regulation based on the size and scope of each such intermediary.
I hope, CA Jinesh, that answers your entire question. So we'll move to the next question, which is from CA Tuhin Chaturvedi, who happens to be our next MC for the second session. He asks, a large part of the Indian economy is in the unorganized sector, and there is a substantial parallel economy which persists despite several steps taken. Do you think that this parallel economy will be a persistent and permanent impediment to the universal adoption of digital finance?
Yeah, this is the, in a way, this is the egg we are trying to break, which is that a lot of them are in the informal. They want to remain small. There are too many benefits in India of staying small. Avoiding the tax network is one of them. But we think that digital finance, by expanding credit and provision of credit at a cheaper cost, could actually now be an incentive to formalize. Right now, the incentives to formalize are not very strong. We think access to digital finance, being able to finance your account receivables at a cheap cost in a competitive manner across different banks without being chased by goons for recovery on your loans, I think this could be an incentive for the informal economy to formalize. Of course, it remains to be seen at what pace and at what scale it happens in due course.
Dr. We'll just take one more question. After that, we'll conclude the section on Q&A. It's from C.S. Sridhar. He asks, how can buy now, pay later scheme work in India?
I think I don't know for sure. I'm not doing transactions myself, but the sense I got from some of the banks I spoke to who were getting onto OCEN and trying to provide this last mile loans was that the quote I had was that if someone wants to buy a toothpaste or a toothbrush today, they can actually buy it with a loan on through some of the platforms. So I think we are moving into buy now, pay later scheme possibly. Why might the lender feel comfortable to do that, provide such a small ticket loan? Because they have access to trustworthy data through account aggregator and so on through the platforms that I was just describing.
Now, though I can see 6 or 7 more questions in the chat box, plus I have personal questions from my own because by profession, I'm also a banker. So I had some questions on your interesting topic, but in the interest of time, I think we'll have to stop here. And sometime we'll try to reach out to you again to ask further questions.
Yeah, thank you so much. Thank you everyone for attending and all the best for 2022 to all of you.
But before you leave, Dr. Viral, I have been by the chairperson leadership committee of both the chapters, by all the valued guests and members, I have been assigned the role to give you a vote of thanks. So it's my proud privilege to have been asked to propose the vote for thanks for this session especially. So Dr. Acharya, the discussion we had, I have to say, about how the financial inclusion can be achieved with more digital finance by deepening the game of finance itself will be truly a game changer. These concepts which we have discussed, the way you have framed the entire session by connecting it with the analogy of chess, must have surely helped the audience, and specifically it helped me to connect it with the topic in an easier manner. The topic about embedded finance obviously gave us some insights how the future of banking can be developed in the coming times. So with that, and therefore Vivek Gupta, on behalf of Bahrain and Kuwait chapter of ICI and the entire CA fraternity here together, and on my own behalf, I extend a very hearty vote of thanks to you, Dr. Viral Acharya, for gracing your important thoughts and sharing with us your opinions today. Thank you.
Thank you so much, everyone. And thank you, Santosh, again for inviting me.
Just 30 seconds, personal gratitude from my side. I have approached him directly without any aggregator. And he's very straightforward and honest in accepting my invitation due to his commitment and timing. But he's given an alternative date, but he was very, very humble and gentle and to accept our invitation and come on time to present us. We are Thank you very much from bottom of our heart and for presenting to us. It's a great, nice to see you, sir. Thank you very much.
Thank you. Stay safe. Bye.
Thank you so much, sir.
Thank you.
Now, without further ado, let me first inform you all the members. We have an exciting Kahoot session after the end of this second session. But for the second session, I'm not will be the MC. I'll be the attendee for the event because there's another MC who is more experienced and more seasoned, who is CA Tuhin Chaturvedi from Kuwait chapter of ICI. So with that, I hand over the control to CA Tuhin. Over to you, sir.
Thank you so much. I hope you can hear me clearly.
It's clear. It's clear. CA.
Excellent, excellent. Thank you. Thank you. So the next session is going to be conducted by CA Rajiv Gupta. And CA Rajiv Gupta is, of course, no stranger to us in the CA fraternity. He is the Vice President and Group Head of Internal Audit in Flipkart at the moment. And he is going to talk to us about next-gen auditors. And, I'm sure this will be extremely interesting for a large part of the audience, since almost all of us have some sort of audit experience, either internal audit or external audit. So I'm sure this will be an extremely interesting session. And I'll just give you a brief introduction on CA Rajiv Gupta. He is an author, he's a speaker, he's a leader in governance and risk management. And as I mentioned, he's currently the Vice President and Group Head of Internal Audit at Flipkart. Prior to this, he has worked as Senior Vice President Global Audits at Diageo, Head of Internal Controls for India and Southwest Asia at Coca-Cola. And he was also with PwC and Assurance Manager with PwC, both in India and in London. He's a chartered accountant, and then he has a number of other designations as well. I'll just read them out. CFE, CISA, CCSA. He holds a diploma in international systems audit from the ICAI. He is also an author, and he's the author of a book called The Technical Guide on Internal Audit of the Beverage Industry. I'm sure related to his experience in Diageo. And this was published by the Institute of Chartered Accountants of India in 2013. He's a guest speaker with the ICAI, ISACA, the ACFE, the IAA, Software Asset Management Strategy, Europe, and the National Academy for Direct Taxes as well in India. So very hearty welcome to you, CA Rajiv Gupta. Thank you so much for giving us your valuable time.
Thank you so much, Tuhinji, for the warm welcome. And thank you so much, Santoshji, for inviting me. I was very happy when I even heard from you, because I met most of you a couple of years ago, just before COVID came in. So I was there in Bahrain in person, somewhere in October or November of 2019. So really looking forward to see some of you on the cameras and share some of the exciting stuff which I have been working on, seeing, observing, and hence ready to share with you in terms of what has been changing over last few years and how that will impact us as chartered accountants, as audit or finance professionals. So with that, I will start sharing my screen. And we'll share the share around as well. Yeah, I hope my screen is up and visible now. Super. So I will start with this, 1 minute video just to set the context for this next 1 hour discussion.
I am not Morgan Freeman, and what you see is not real. Well, at least in contemporary terms, it is not. What if I were to tell you that I am not even a human being? Would you believe me? What is your perception of reality? Is it the ability to capture, process, and make sense of the information our senses receive? If you can see, hear, taste, or smell something, does that make it real? Or is it simply the ability to feel? I would like to welcome you to the era of synthetic reality. Now, what do you see?
So, ladies and gentlemen, welcome to this session on next gen auditors. With that 1 minute video, what you have just seen is the gentleman speaking, the one we have seen in many Hollywood movies. He was not him. Yeah, it was not. It was actually a deep fake. It was made by combination of his past pictures, the way he speak dialogues, the way he speak, the way his face moves, his eyebrows moves, and so on. And that is something which is one very small example of what is changing around us. And I will be picking some of the clues from Dr. Viral as well. Some of the topics, some of the concepts which he touched upon, and I will be sharing my perspective on that as well. So when we talk about next gen auditors, so it is very important that we all are on the same page. Firstly, that out of 160 plus of us, who we are, whether I am Gen X, Gen Y, or Gen Z, because that's something which often we get confused. And then who is millennial? So millennial is basically Gen Y, which is on the center of your screen. So based on your year of birth, you can make out, from which generation you belong to. And when we talk about next gen auditors, it is primarily about Gen Y, which is millennials, and Gen Z. And now you may think that Rajiv, you don't look like a Gen Y or Gen Z, or some of us are not. Then why we are talking about new gen auditors? It is because of two reasons, ladies and gentlemen. One is either we ourselves are next gen, or we are going to lead next gen. In either of these two roles, we need to be very clear that what is coming up. Both of us, both next gen as well as us who are going to lead next gen, we have to be clear on our specific roles, because both of us won't be playing same role. And hence this presentation. So I will be spending next maybe around 35-40 minutes in sharing some of the concepts and the learnings which I had over the last few years, and then we'll open for Q&As. So with that quick definition, as I was just referring to next gen, and it is millennial and Gen Z. Why it is important? Because there was a survey which was conducted, and it found some very interesting facts. This survey happened somewhere in 2018 or 19. And it said that by 2020, which has already elapsed last year, 1/3 of our workforce is going to be millennials, and 1/4 are going to be Gen Z, which means our next gen auditors anyways are going to be somewhere around 50% of our workforce even today. And if that is what is happening around us, it is very important for us to know how to manage them, how to lead them, and how to ensure that the environment in which we operate. Yeah. And I was, listening to some of the very interesting questions of how different industries and startups they are coming up, and how they are solving some of the problems, of a particular country or of a particular nature. So how millennials and how next gen auditors are going to play an important role in that, we're going to discuss in next few slides. Some of the important trends which are changing, and which are creating some of these startup ecosystems are, number one, and the most important, ladies and gentlemen, is we are moving towards convenience economy. And that is why some of you may have heard that people say we are not any longer buying products or services. We are now buying convenience. Just think about it. We are no longer buying products and services. We are actually buying convenience. And now if you take a step back, ladies and gentlemen, you will realize that the newer organizations which are coming up and which are exponentially growing in their valuations, they are the ones which are providing convenience to you. They are the ones which are solving some problem for you. And this is an era in which we are moving. And this is getting powered by two things: rapid digitalization, which Dr. Viral also talked about, and higher connectivity. And when I say connectivity, it is primarily the fact that now 3G, 4G have become very, very common, very widespread. And now with 5G coming in, this will be further, convenience economy will further spread because of IoT, Internet of the Things. IoT was not picking very fast in last 3 to 5 years because it had to had 5G. 5G is now coming in many countries. In some of the advanced countries, it's already there, but in many developing countries like India as well, it is yet coming in. Yeah. So powered by digitalization and connectivity, the world around us is changing. And since the world around us is changing, the way we are auditing has to change. Yeah, because the risks are changing. Some of you would have already seen that the way metaverse, decentralized finance, blockchain, and other concepts are coming up. And I was hearing Dr. Viral as well when he was giving example of in case of international fund transfer, around 2 to 3% of fees is being paid. There are many such challenges which are currently there in our CFI. CFI is centralized finance, where we use our banking systems. That is now getting challenged by decentralized finance, which is being driven by cryptos like Ethereum and many more. They are going to become more popular. Will they take over banking system, centralized banking system? Only time will tell. But they are going to become much, much more bigger as compared to where they are today. And ladies and gentlemen, if it is going to become bigger, if your clients are going to okay, that will be coming in next slide. If your clients are going to adopt decentralized finance, which is crypto-based, blockchain-based financial system, it will become very important for you to hire those new gen auditors who understand these newer technologies and who understands how to identify and mitigate risk in those environments. So that is something which is changing very fast. Last point on this slide, ladies and gentlemen, I want to emphasize, which is our newer generation, our colleagues, who are either millennials or Gen Z, they give more importance to joining a purpose-driven organization versus that organization where they are getting higher salaries. And I'm going to talk about this point in slightly more detail in next few slides, one of the slides. But this is something which is going to be very important driver for us to ensure that how we gonna hire and retain best-in-class next-gen auditors. So being purpose-driven organization is becoming very, very important in that sense. Metaverse is coming very fast. I don't know, how many of you are tracking this news, but powered by blockchain, metaverse, NFTs, decentralized finance, they are becoming realities. And if you don't believe me, so these are some of the company names which I am sharing with you who have made some announcement in last 1.5 months, not years. Every day, at least one new organization, global organization, is making an announcement of getting connected either through either to blockchain ecosystem or to metaverse or to decentralized finance in one way or the other. So if you see on the screen, organizations like Walmart, Fidelity, there are many hospitals in America, Facebook, Apple, Samsung, PwC Hong Kong, Pfizer, MasterCard. These are some organizations which I just picked up. There are many more who have already started either working on or they have filed patents for some of these cryptocurrency related technologies. Now, my point to all of you is these companies are either going to be your employers if you join them as a finance, leaders or finance managers, or they are going to be your clients. Yeah. And if these companies, they are exploring these newer technologies, these decentralized technologies, it is high time for us to start investing our time and effort, either ourselves learning how these environments operate and the risk in these environments, so that we can advise our clients accordingly, or we bring those people, those next gen auditors on board who know these technologies better than us. So I strongly believe it is high time for us to start looking in these newer technology areas as well. On decentralized finance, ladies and gentlemen, and I was listening to some of the questions being asked around banking system and things of that sort. So if you see today, entire financing system and insurance systems are centralized. Yeah, they are with banking institutions and the insurance organizations. But the way environment is changing around us, there are many organizations which are coming up, obviously driven through blockchain as a foundation, which are going to bring a lot of change, the way we borrow, the way we invest, the way we trade, the way we take insurance, especially driven by smart contracts. So smart contracts earlier was a concept. Now it is becoming a reality. And again, coming to the point that if these companies are actually, if they have started using smart contracts and they have started working in the environment of insurance, banking, and so on, it's high time for us to leverage, to understand how these industries operate and how we can do risk advisory for our clients or for our organizations in that case. This is a quick 2-minute video, I think 1 or 2 minute video on decentralized finance. I have added the link of the video as well in my presentation, so it will be easy for you to refer to it later as well.
DeFi is a term for the next generation of digital financial services and products that is being built on and enabled by blockchain technology. So blockchain is the overall innovation behind Bitcoin. And Bitcoin you could think of as the largest use case of blockchain technology today. Blockchains have gotten much more sophisticated, and they enable much more complex financial use cases and applications. These new use cases are called dApps, decentralized applications. When you think about DeFi, apps is greater than the parts, right? It's not just a collection of these dApps, it's an interconnected ecosystem. And the goal of DeFi is to create a new financial system that is fully digital native from the beginning. It's going to be faster, it's going to be interoperable, it's going to be more transparent, it's going to be global from day one. Anyone around the world can use these financial products and services, accessible to anyone with an internet connection. So a good way to imagine the long-term impact of DeFi is to think about it in comparison to the internet in the 80s and 90s when it was getting started. The people who used the internet in the very beginning, they were people who were diehard technologists, right? Because the internet was very difficult to use. There were all these chat rooms, there were bugs. Over time though, what you saw was the internet is that these early adopters, they seed it, they're the first users, they invest in these protocols with their dollars, and they attract VCs and investors like me who pour more investment money in, and we finance new technologies, we finance new, better user interfaces that make it more palatable for the average American, the average user. And eventually, it's just like the internet. There's going to be so many people online and the experience of the internet will become even better and better than non-internet experiences for certain use cases, right? Like for e-commerce versus retail, that the mainstream starts to adopt it. Everyone starts adopting it. You know, the front end of our financial system is beautiful, and it's all on smartphones, and it's all on apps, and it's digital native. You go on Robinhood, you go on Schwab or E-Trade, but the back end is very clunky. The back end hasn't changed in decades, or if not longer. It's basically just switch operators, you know, like running things over phone and very old technology systems. This, I think, is one of many things that DeFi will and blockchain technology will solve. You won't have to have your back-end provider call you on the phone if you're Robinhood and tell you that this is a problem. They'll know that it's a problem days or weeks in advance. And so even with us in America, we're seeing the problems and the little cracks that can be quite big with what happens when you have a fast digital native front end, but a very slow, creaky, not digital native back end.
So this video, ladies and gentlemen, was just to give you an idea of how decentralized finance, I mean, the finance which is driven by blockchain, how it is going to change the way we use financial institutions, insurance companies, and so on. There is one more video which explains in more detail how decentralized finance actually works. I have given the link of that YouTube video in the one of the previous slides. So feel free to have a look at that. It will give you more idea on how this new ecosystem is gonna change how people around us operate. You still have a choice, and you will have a choice, ladies and gentlemen, to continue using the centralized finance. Centralized finance means the existing banking systems. But people around you, and especially the next gen around you, is gonna move to newer environments. Yeah, is gonna move very fast in these ecosystems. Along with them, the clients, the next gen clients, the next gen companies, they are also gonna move. I read Paris Hilton saying, very recently in one of her interviews, she said that metaverse is not only going to be the future of work, it is going to be the future of games, future of music, future of dance as well. So people will actually start working, living, and enjoying in this new environment. And if that is the case, if your clients, your colleagues, your friends are going to operate in that new environment, it becomes very important for you and me to understand two things. Number one, how that environment operates. Number two, what are the risks of that environment? Is there anyone who is thinking about, will there be any data privacy risk there? Is there anybody who is thinking about, will there be a PII, personally identifiable information related risk there? And there are many more, information security, hacking, and all those things. So there are going to be different risks which have to be evaluated. And I don't think there is someone better than us, better than you and me, who can help the companies in better assess these risks. I think this is the high time where we can start, exploring these newer areas, so that we are seen as next gen audit and the finance functions. And when I speak about what, how, and at what speed things are changing around us, sometimes I hear the comments, where some of our fellow chartered accountants, they say, Rajiv, what you are saying, yeah, is fine, but we can still decide to adopt or not to adopt, some of these changes. We can decide, we still have a choice to learn or not to learn, these newer ecosystems which are growing around us. And they feel that, Rajiv, it is a choice with us to audit or not to audit these environments. Yes, partially I agree with these three comments, but not fully. And the reason is, when the world is changing, ladies and gentlemen, the premium which you and me are carrying as finance and audit professionals That premium, ladies and gentlemen, is moving towards newer areas. What does that mean? What you and me have been doing historically, the premium for that jobs is reducing. The premium for those jobs and roles is decreasing. And this is not what I am saying. This is something which is there, proven by the research. And what you see on the screen right now is an extract from the Future of Jobs report of World Economic Forum. This came only last year. It is available on Google. I have given the link below. What does this report say? Firstly, let's see on the right-hand side. It says among the top 20 roles for which the demand is decreasing, if you see the red boxed ones, accounting, bookkeeping, accountants, auditors, and then if you come down, financial analysts. The demand and the premium for these roles is in the top 20 in terms of the speed with which the premium of these roles is decreasing. And then if you look at on the left-hand side, among different roles for which the premium is exponentially increasing, I have circled 4 where we as finance and audit professionals, we can definitely create an edge for us. For example, data analyst and data scientist, AI and machine learning specialist, big data specialist, digital transformation specialist. Digital transformation means when these companies, these traditional organizations, when they want to transform their culture, their ways of working so that they can compete with new age organizations, they would need digital transformation leaders to help them strategize and take them forward. I very strongly believe that at least these 4 green boxed roles, we as chartered accountants and finance professionals, we can definitely create an edge if we at least develop working knowledge in at least one of these areas. We don't need to be an expert, which means we don't need to start programming in Python or R or whatever new machine learning tools are coming. Even if we don't know how to program, but we need to know how to use them. What value these machine learning and AI tools can bring to my clients. And I think that is something which will help us create an edge and make us ready as new age finance professionals and new age auditors as well. So that was the another key message I had on this slide. Now, artificial intelligence and machine learning, I'm very sure most of you would have already heard it for maybe for last 5 to 10 years. You're not hearing it for the first time. But I'm also sure that around half of us on this call are not really well versed in using AI and ML right now. And why I am saying this, because if you analyze history, if you look at all the technological developments in the past, you will see a very interesting trend, ladies and gentlemen. And the trend is any new technology, it remains an emerging technology only for around 12 to 14 years. It is proven, it is there in the data. 12 to 14 years, it remains as emerging technology, which means for 12 to 14 years only, it carries premium, only for that period. After that, ladies and gentlemen, it becomes a commodity. Let's take an example. When I became chartered accountant in, around year 2000, in early 2000, that time I learned Microsoft Office, and that was like a basis and like a premium, like an add-on knowledge which I made it into the gym. Which one is getting up. So that was, so when I became chartered accountant, I made sure that I know MS Excel, MS Word, and my PowerPoint presentation. And that was a time when it was asked that, do you know Excel and do you know the formulas of Excel? You know how to make presentations. Now, even a class 7, class 6 student, he or she is also preparing PowerPoint presentation. And I will sound stupid if I ask a chartered accountant whom I'm interviewing today, that do you know Microsoft Excel and how to apply formulas? Do you know how to make PowerPoint presentations? Why I will sound foolish? Because, ladies and gentlemen, Microsoft Office today has become a commodity. It is no longer a premium product. Everybody is supposed to know it the way we all use salt in our food. Salt is no longer a premium. It is not a luxury. Similarly, Microsoft Office, which was somewhere in late 90s, it was a premium when many of us were using MS-DOS, which was on floppy drives. When we were moving from MS-DOS to MS Office was premium. But now it is no longer a premium. It is a commodity. Similarly, AI and ML, which you have been listening for last 5 to 10 years, it is in the last couple of years of premium. It is estimated, ladies and gentlemen, that by 2024, the premium of AI ML will vanish. After that, it will become a commodity the way Microsoft Office is a commodity. Now, what does that mean? It means any fresh chartered accountant, any young chartered accountant, or a mid-level manager, he or she will be expected to know and have working knowledge of AI and ML. In next around 2 years, this is going to become reality. So here we have a time, ladies and gentlemen, we still have a time, around 2 odd years, to still get premium before it is forced on us to go back and learn AI, ML, and how to use them. And that is why I prepared this particular slide for discussion. Now, coming to next few points around what is changing around us, and how new gen auditors and new gen finance professionals are gonna look different than how I was in my younger avatar. Number one, the cyber security, which we used to talk about, when, for example, when I was doing CISA and when I was doing DISA, and when I was preparing for CISSP and other stuff, cyber security was something like static. AI and machine learning was not part of cybersecurity. So if you have learned the tricks and trade of cybersecurity, how to take care of hacking, more often than not, you would be a successful cybersecurity professional. But now it is no longer the case. Now these hackers, they have clubbed cyber risk, which is hacking, with artificial intelligence. What does that mean? When they do the denial or distributed denial of service attack and other attacks, those attacks, they are carrying algorithms which learn all on the move. So if, for example, if they reach your organization and they find that your organization is much more stronger than another organization, then it will learn on the go. It will not come back to the programmer. Programmer doesn't need to change the coding. It will learn on the go. Okay, this trick is not working. Let me try something else. Okay, this trick is also not working. Let me try something else. So once the programmer has designed it, it is out of his hands. It will learn. It will fail. It will learn on the go in the real-time environment. Now, if that is the type of cyber risk we are carrying today, what we learned a few years ago, when we, some of you, I'm sure, would have done either CISA or some, more technical certifications around cybersecurity. what you learned at that time is no longer relevant. Yeah, it is changing because anything and everything we are doing is getting clubbed today with AI and ML. Yeah, so that is one important point I wanted to share. Then I'm slightly changing my gear and moving towards the people part. Yeah, and many of us would have heard about this great resignation, the concept which actually became much more popular in year 2021 across the globe, including India, when a lot of people, significant number of people, especially the younger colleagues, they started moving out of the organizations. So then a lot of surveys have been conducted, and what those surveys found that if you have to retain the next gen, the new gen professionals, whether it is finance professional, audit professionals, then there are at least 4 things you have to take care. Yeah. And I will share the link of this survey from where I have picked up these 4 key takeaways. Number 1, our younger colleagues, millennials and Gen Z, they are more interested in working in those organizations where they are getting more opportunities. More opportunity means not only the vertical growth, but horizontal growth as well. Where instead of just doing one particular role, if I want, after 2 years, if I want to try this, am I allowed or not? If I want to try another role, maybe at the same level, maybe above, am I allowed or not allowed? Yeah. So people are, the talent is getting, is moving towards those organizations which are much more agile, much more adaptable from that point of view. Our younger colleagues, second point is they are moving towards organizations which recognize what they are doing. Yeah. Which focuses on what they are doing well versus being a fault finder of, among 10 things which were assigned to you, these 2 things you failed, please better improve next time. So that is again a cultural change which has increased exponentially, at least in last 1 year. Yeah, it was there. The expectation was there a few years ago as well, but in last 1 year, the exponential impact has gone tremendous, taken a tremendous hit. Third is, especially because many of us are working in virtual environment these days, regular communication and check-ins is becoming a very important expectation by our younger colleagues. And if you want to retain and attract those best-in-class talent, this is something which is becoming a basic ask from most of them. Lastly, flexi working, not only in terms of flexi hours, which used to be a concept earlier as well, but also in terms of hybrid working. Yeah, there are many organizations which are slowly moving towards that, and hence they are the ones which will be providing competition to traditional organizations which strongly believe in every employee working from office all 5 or 6 working days. So these are bare minimum 4 expectation changes which are driving the talent movement across the globe. So this is not the India survey. This is a global survey where I think India was also, some participants were from India as well. Bring your own device. Yeah, we can, skip that. Hybrid work environment I have spoken about. No code is the new code. Yeah. So I'm sure, some of you may not be interested in learning a lot of technology, because, many of you have interest in pure finance. Yeah. And which is absolutely fine. And hence, as I said at the beginning, that those companies are getting more and more, market cap, more and more valuation, which are solving our problems. So ladies and gentlemen, the good thing is very recently, last, I think around 2 odd years, there are many startups which are working towards enabling you to use many of these data science related tools without doing any coding. I remember there used to be a tool around 10, 12 years ago. It was part of Microsoft Office suite. It was maybe MS Access. If some of you can remember, can recollect, if you can just put on the chat box, I'm forgetting the name, where you could drag and drop some boxes and then you could connect them with arrows. Yeah. And then with those drag and drop and arrows, it used to actually work as a macro or as a formula by which then you could just save it and it will do the task. Similarly, drag and drop options are now coming in many data science tools. So when I encourage you all to get working knowledge of data science, please explore these no-code tools as well, which are coming up. A couple of them, maybe I can share with you, which I have myself used, and I found them to be really, really helpful. You don't need to learn any coding, and they themselves do coding in the backend, and you just do drag and drop of the boxes. So that is how the world is, changing around us. It is making it convenient for us to learn newer technologies, to learn, data science in much easier manner. Now, if these are some examples, not 100%, these are not 100%. If these are some examples of what is changing around us, then how that would impact the scope of audits, yeah. Whether it is, whether we are internal auditors or whether we are auditing a client, I strongly believe that our traditional audit anyways will continue the way we have been doing. But as I said, a lot of that, ladies and gentlemen, will move to robots. Now, what does that mean? If you just recollect, the way, whatever we have been auditing so far, if you have invested some time in standardizing that process, you will see that process is repeatable. Yeah. Whether it is starting with, the planning of the audit, scoping of the audit, doing actual testing, or maybe picking samples, doing actual testing, documenting the testing, creating the audit report out of that, and closing the audit. If you see, ladies and gentlemen, all these steps can be standardized. Yeah. And not only can be, I'm sure many of you in your own firms or in your own audit departments, you would have standardized many of these processes. And the beauty is, in today's world, anything which can be standardized is going to be automated. Yeah. And who will automate? RPA, robotic process automation. And it is not future, ladies and gentlemen, it is already there. It is only the fact that very few audit functions have adopted it as of now. Yeah. But these bots, they are already there, at least for last 4 to 5 years, at least, maybe more than that. But last 4 and 5 years, these bots are available. They are waiting. These bots are waiting for you to move your traditional auditing steps and traditional finance steps to bots. Now, if all those tasks will be done by bots, then what you and me will do? We will focus on what is on the screen right now, because this is something which is not standardized right now. This is something which represents newer risk. These risks, even we don't know what all audit planning steps, what all data, what all testing, how to select the samples, we don't know as of now. Or at least we don't have a standard process as of now. Hence, the audit of these 8 to 10 areas for next, I believe, next 5 to 7 years will be with us as human beings, and our clients or our stakeholders would be more than interested in us spending quality time on these risk areas versus the traditional auditing, the traditional finance, which we have been doing so far. So that is going to be the key focus areas, the key scope of audits of the future. This I have already talked about, that every technology, emerging technology, has around 12 to 14 years lifetime. After that, it becomes a commodity. AI ML, it started around 2010 or 12, and hence around 2024, it is going to become a commodity. So you and me, we have around 2 more years to still get premium around this AI ML as a technology. After that, we all will be expected to have basic working knowledge of AI ML. Yeah. So if I then, I'm just moving to now the closure part of it. So if I then, say that AI ML, yes, it's going to be a commodity. So you have only a couple of years. What is going to be next big thing is how blockchain, and decentralized finance is gonna be adopted either by your employers or by your clients. And the speed with which best-in-class companies are researching, are taking patents, are taking copyrights, and so on, it is going to be a reality. And hence, the premium in future will lie there. And I don't think there is going to be any plan B, just like you don't have any plan B for Microsoft Office. Yeah. Yeah. Some of you may be using, Apple laptops as well. But between these two, beyond these two, you don't have, plan B. So to summarize, what the, how the new age auditors, and the audits will look like. Number one, the functions, new age audit functions are going to be purpose driven rather than money driven. So your younger colleagues are going to ask very clearly why we are doing what we are doing. Yeah. They will not accept anything by face value, that just because Rajiv Gupta is saying, he's the boss, he's saying, so we have to do this audit or we have to do it this way. So purpose driven, functions and the organizations will attract the right talent. Our younger colleagues are going to be more experimental, creative, and hence they will have more interest in joining purpose-driven organizations, those organizations which are creating convenience, those organizations which are solving problems for the world. They will be more experience-driven, and hence, instead of buying cars, they will prefer Zoom cars. Yeah. So they would prefer to be light on assets. They will prefer to be light on sunk cost. They would prefer to stay in rented accommodation versus buying wherever they are traveling. Yeah, they will prefer remote work. And second last is, I strongly believe that data science and IT audit certifications very soon, they are going to become basic qualifications for any finance and audit professional. Yeah, that's my very strong belief. I'm not seeing right now this happening, but maybe in a couple of years' time, this will happen. So again, my encouragement to all of you that it's right time that we start focusing on some of these areas as well. And lastly, important takeaway is, ladies and gentlemen, the key theme, I wanted to share today with all of you in terms of new age auditing is, it is high time for us to get comfortable doing what is uncomfortable. There's a lot of changes. There are a lot of changes which are happening around us, which will impact both the finance professionals as well as audit professionals. And we may not have a lot of options to succeed. We may still survive with older ways of working, but the premium will move to the newer technologies and the organizations which are purpose driven, which are more experimental, and so on. So that was the piece which I had put on for discussion today. Happy to pick up if there's any question. Yeah, Tuhinji, thanks for sharing. Yeah, it was MS Access, right? Yeah.
Yes, it was MS Access. Okay, so I'll just take a few of the questions which have come through. So one is that, thank you, of course, it's from CA Nath Venkita Chalam. Thanks for the excellent session. Considering the growth of use of next-gen technology on the job market, there is an increased need to add these emerging topics in the curriculum, etc. Can you please throw light on how the institutes like ICAI, etc., are updating their curriculum to meet the emerging requirements? I think this is a very interesting question.
Yeah. No, thanks for asking. I think ICAI is doing a fantastic job with so many different committees in coming up with different certifications around that. I myself earlier in my previous roles, when I was a bit younger, I myself used to be one of the faculty for some of these next gen programs, I would say. A lot of effort goes into that, and one challenge which I see, ladies and gentlemen, I'm sure it may not be the case here in Gulf, but unfortunately, when I used to train in India, I saw some of the professionals, they were more interested in certification versus knowledge. Yeah, that doesn't help. That doesn't help because in the very first month of your job, it is very easy for your leaders, for your stakeholders to understand how well you can actually help them solve their problem, solve their these technology risk related problems. I very strongly feel the diploma of IS audit program, what we call as DSI as well, is a fantastic program, and I personally, it's my personal view. Personally, I give it more weightage than CISA. I am both qualified. I'm CISA and DSA both. So this is not to dishonor anything. But the amount of pain which ICI takes in organizing the live sessions, it varies between 8 to 10 full day programs where 8 to 10 hour sessions are conducted. A lot of books, best-selling authors are shared with us to enhance our knowledge. But if those certifications are done just for the sake of certification, that's a problem. So a lot of good programs are there in ICAI. My only encouragement is please go for the knowledge and not for the certification.
I think that's a very good message. Thank you so much for that, and a very relevant message to all of us. Okay, so then we have CA Sindhumul Thomas, who shared with us about Scratch. He tells us that Scratch, developed by college students, is a similar drag and drop simplistic programming language.
Yeah, very good example. So thanks for sharing that. And since you have shared the link as well, I am sure our friends and colleagues can click on that and go to there. There are a couple of more open source. For example, there's this not Alteryx. What was that? 9. So I'll just put on the chat. I have just put on the chat. So there is another one which is again freeware, and it is a drag and drop. I encourage all of you to explore it. It's open source, and hence you don't need to pay for any license. There are the training material, user training manual is also there in the help section of the website. I think in a day's time, maybe if you just spend 6 to 7 hours just understanding how and when to use which box, you can actually do very good quality data analysis using these tools. There is a paid version of NIME as well, which is slightly different. It is called Alteryx. It costs around, I think, 3 lakh rupees per user license. It is very similar to NIME, but why to spend money? I mean, when something similar is available free of cost, but you have both the options. Why I'm giving example of Alteryx, guys, because there are some companies where IT department says no to open source. Yeah, they are scared of open source tools, so they say we will go for licensed software. So if you are working for a company where you prefer licensed software only, you may try Alteryx. But if you are absolutely fine, or maybe on your personal laptop, you can try NIME and Scratch. I think one of our friends just shared. Yeah.
Okay. So the next question is from CA Pradeep Rajagopalan, and he's asking, do you see a convergence of risk audit, IT security, and compliance?
Very relevant question. Very good question, Pradeep. I strongly believe in it for last 10 to 12 years. But I'm shocked to see that this convergence has not yet happened, as a widespread practice. Yeah. But sooner we do that, we as auditors, we will be able to provide real value to our auditors. Yeah. I am trying something similar in my current organization, and we are experimenting by bringing a lot of these things together. And when we are doing whiteboarding, we realize it is not easy, Pradeep. But with the experience which me and my team is carrying, and the amount of risk which we carry in my organization and the ecosystem in which we operate, it is high time that we bring this convergence. But yes, I fully agree with you. We are actually running late in doing that.
Okay, so the next one is from CA Badri Patro, right? And he asks, I think it's again a very relevant question, especially for us older accountants. I think the question in the second part, it becomes much clearer. He says, how are we going to compete with the younger generation?
We don't need to, sir. Mr. Badri, we don't need to compete. We need to complement. Yeah. So what I encourage that, for example, the experience, the wisdom which you and me, we are carrying, it is unmatchable. Yeah. And the newer technologies, some of the examples which I shared into this session, some of the technologies, we need two things. Number one, we ourselves need just the working knowledge. Yeah, just the working knowledge, so that when we hire our younger colleagues who are actually expert, we understand what they are saying, and we can use our wisdom to direct them as well, that where the risk may lie, which they, because of lack of their experience, they may not be able to appreciate. So I think the combination of wisdom with new technology is unmatchable, and it is not about competition, it is about complementing. And I think this complementing is going to be an amazing combination, very helpful for our organization, both from finance as well as audit perspective.
Right, thank you for that. We've got a lot of compliments, so there are a lot of compliments to you for an excellent session, right, which has been very informative and educative, right? And that will lead me very well into my vote of thanks. So, CA Rajiv Gupta, thank you very much for your wonderful session. So when you started off with Gen X, okay, I'm a Gen X accountant. But in the description which you'd given of work-life balance, I didn't really see myself. I saw myself more as a Gen Y accountant. Anyway, it was very interesting start. And then I think, if I was to summarize your message, I think it was basically what you have told us is that there is a lot of new technology. And there is a lot of new technology today. There is a lot of new technology on the horizon. And you have very nicely sort of nudged us out of our complacency. And you've given us the message that we have to upskill, we have to reskill if we want to remain relevant in today's competitive environment.
Absolutely, so very well summarized. Yeah.
Right. So that is the essential message which I've got. And a number of things resonated with me. I was taken back to my auditing days where I was taught about auditing through the computer, using CATs and computer-assisted audit techniques, using audit command language, etc. Then, having worked in a technology company, this concept of commoditization of technology also resonated with me. And a lot of the things which you brought up for a lot of us who don't work in finance, like DeFi, the Internet of Things, etc. A lot of us like non-fungible tokens and stuff, we are really not familiar with in our day-to-day. So that was wonderful. And it was all, done in a very nice and sort of almost persuasive, but softly persuasive manner. So thank you very much for that. Thank you for your encouragement, and thank you so much for your time today. We are really grateful to you for having spared your time.
My pleasure, Tuhinji. Thank you so much. And thanks, Santoshji, for inviting me. I'm carrying very good, memories when I met, many of you in person 2 years ago. And, once things are back to normal, maybe, would love to meet you all in person again.
Thank you very much, sir. It's our pleasure to hold you here, and it's a wonderful session. You are an eye-opener for us that we shall adopt faster the technology to grab the advantage. Other way around, we are just followers like anybody else. Okay, thank you very much. Nice.
My pleasure. So thank you so much, Santoshji.
Yeah.
Thank
now
you.
We'll have a Kahoot session. Out of all those things you are interested, you can stay back, and there will be a Kahoot based on the session today even. I think, may I invite our executive committee member, Radhika to conduct the Kahoot session. She will.
Hi, everyone. A very good evening to each one of you out there. So both the sessions were brilliant, and it was very interesting. Everybody must have been glued to the screen. So now we'll have a short and quick Kahoot session to test everyone's session attending skills. I would share my screen. Is everyone able to see the screen and the Kahoot pin?
Yes.
Yes.
So for any of you who are new to this, you will have to download Kahoot app in the other device other than your laptop or in which you're using the Zoom, and you will enter the pin, and you will have to answer in your other device where you have the Kahoot being operated. You will be given the options, and that color you'll have to choose in Kahoot.
Online,
I request the members to join in so that we can start the Kahoot session.
I think you can put light music from there.
You're not able to listen to the music?
Yeah, no music is not. Sound you can increase little.
If anyone has questions regarding how to start it or something, please feel free to ask. We'll wait for 1 more minute and then we'll start the quiz.
I think we can start.
Okay, thank you, Santosh. Which of the following describes Mr. Viral Acharya? Okay, that's great. I request all the other members to keep your cell phone.
Radhika, please unmute yourself.
All right, so we have Ms. Arunava leading the scoreboard. Moving to next question. What is the phase 1 of digitalization? This was the trap. So still we have Arunava leading the board, followed by CA Mani. How has India been embracing digital finance over 13 years? That's great. That's great. We have a change in the scoreboard. Mani is leading. Congratulations to Ramesh for having the highest streak of 3. China has been seen as the role model for the way digital finance has been developed in the country. Okay, many of you said true. Congratulations to CA Mani for still being on place 1. Government-backed utility apps like Beam creates trust among its users. That's great. Scoreboard remains the same. CA Rajiv Gupta is currently the VP at. We have this in our flyer. The hint pretty much helped, I suppose. Okay, no change in the leaderboard as well. What are some of the Gen Z, Y, and Z auditors' mega trends? That's great. Minor change, Sandeep, she has come on the second place. Congrats to Roy for making a comeback with 3 in a row. That's great. Metaverse is going to the future of work only. Correct. It was said by the speaker that it's going to be future of life rather. Congratulations to Sandeep once again. Moving to next question. Premium on following jobs is increasing. That's great. The scoreboard remains the same as well. What would not enhance retention of next-gen auditors? That's great. So we have Santosh on place 4. CA Tuin has made a comeback with 3 in a row. Congratulations. Second last question. When was ICI International Conference 22 conducted? It was a recently conducted event. Sandeep ji still remains on place 1. Santosh has come to second. Congratulations. Last question. What has been BCICI's latest initiative for young commerce students? Yes, many of our members are following all the flyers. Good to know. So on place 3, we have Ramesh. Congratulations. On second, we have Santosh. Congratulations to Sandeep for being on place 1. Congrats to the runners up as well, Mani and Suresh ji. Thank you everyone for participating. I shall stop sharing the screen.
Thank you very much. All of you attending the event, great participation, a lot of attendance. Thank you very much, CA Deepak, Chairman Kahoot Chapter, for joining us and partnering with us.
Thank you, Radhika. Well done, very well conducted, and it was a good, session. Thanks for inviting us to join you. We look forward to have more events in the future.
Sure. Okay, all of you, goodbye. Well, good night.
Thank you. Good night.
Thank you, everyone. Thank you, Radhika, for the nice.
Thank you.
Thank you to everyone. Good night to all.
Thank you, everyone.